Hello and welcome to the Bitcoin weather report. Today is Sunday, October 30th, and I've got a good one for you today. All right, let's learn some things about what's happening in the Bitcoin market today. And before we get started into the analysis, let's take a look at the Wall Street cheat sheet, psychology of a market cycle, because this is playing out right now, every day in front of our eyes. Now, it doesn't seem like much is happening because this happens over a period of time. There is a time component that has to happen. So let's see where we're at. Anybody who was around in 2021 knows that it was euphoria. It was euphoria in the stock market. It was euphoria in the crypto markets. Everybody felt like a genius. People that felt like they missed the boat were jumping in, and then it crashed. That's how it goes. That's how bubbles work. So it crashed, and we saw the complacency, the anxiety, the denial, and then panic and capitulation. So we're going to go into what that looks like. But I think we're in the kind of anger and depression part of the we're past anger. Now we're in the depression part of the bear market. That's how it goes. All right. And this is how the emotions work. And you can feel yourself. You can feel your own emotions in these stages. Like right now, we're in this despair phase that's just it's just where we're at, because if you bought higher and you're holding on to Bitcoin underwater, there's that pain, right? There's that psychological pain of my investment is underwater. If I sell, I lose money. So anybody who was going to sell has sold by now. It's been months and months since capitulation, and the market has shaken the weak hands out. So right now, all that's left are diamond hands. People that are holding on to their Bitcoin and not letting go. And it would take a lot to get the market participants holding on to it now to let it go. Right? There's just very little being sold at this point. All right, so the Crypto Fear and Greed Index tracks these emotions. So right now, you can see in 2021 here, January 2021, we were at an all-time high of 93, right? 92, and then in September of 2021, in August we reached almost 80, and then we got past 80 to 82 in October 20th, 2021. That was a year ago, right? So anybody who bought Bitcoin at that point is pretty much underwater, and they've had spent a year in pain. Now, a lot of those folks were newbies. They were brand new to the Bitcoin market, and they bought the top. So a lot of them are going to freak out and sell at a loss, and a lot of them have. And their Bitcoin has been purchased by diamond hands. All right, so here's the logarithmic view of Bitcoin. Right now we're on a monthly chart. I'm going to switch it to the daily chart time frame real quick. All right. And you can see here, in October 20th, 2021 was this point right here. So we were in the euphoria stage. People just can't believe it'll go down at all. They cannot believe it, right? So a lot of folks bought up here, a lot of new participants, and they're either sold by now or sitting at a loss. Well, anyone sitting at a loss by now, the chances of them selling are a lot lower. Because if you bought up here, well, let me back up. You're statistically unlikely to sell past 5 months. Once a Bitcoin has been held for 5 months, then it's statistically likely that Bitcoin will stay off the market indefinitely or for a long time. So a lot of time has passed, and right here, since the last capitulation, let's see, when did this occur? Right here, That was June 18th, looks like, was that cycle bottom right here. And it's been, let's measure, it's been 134 days, right? So we're actually coming upon that 5 month time frame. Coincidence? I don't know. But that, go figure. So there's this time component because it gets boring. And all this time in the last 5 months, people have been waiting for it to drop lower. Everybody's been waiting for it to drop to 10,000. That's what everybody says. 10K, 10K, it's going to 10K. There's no way. They'll blame it on, oh, the Fed is raising rates. Oh, the stock market's going down. Oh, this, that. Any reason that they can make up in their head because they're inundated with bad news. Bad news always comes out in bear markets because they're trying to get you to sell. That's what they want. So a lot of good news comes out in bull markets. And a lot of bad news is glossed over. There was plenty of bad news when Bitcoin was skyrocketing, right? What happened? How come the price didn't go down? Because the news doesn't move the price. The news is used to move the price if the people running the markets want it to. Okay? That's how it works. It's the people that react emotionally to markets will marry what happens in the markets to the news without really having any idea what actually moved the market. So get it out of your head that news moves the market, right? If news does anything, it only helps them accomplish what they're trying to do already. Okay? For the most part. So now this is some massive capitulation. Look at this waterfalls here. You had red waterfalls here, then you had red waterfalls here. This is big time right here. That is big time capitulation. This is huge. This is massive. I mean, that's brutal. I don't care who you're talking to. That's brutal. So why anybody thinks it has to go lower is beyond me when this is brutal. We're already 75% down from peak to trough. We're looking at 75% drop, which is massive. That means a lot of people are sitting at a loss, right? Or they've sold already. So if you could look back, let's go backwards. That price was last seen around November of 2020. So anybody who bought any Bitcoin between that time frame and this capitulation candle is underwater right now. All right. So anybody who purchased in 2021 and for this year and a half, okay. So this has been a brutal bear market, and it has been, let's see here from the top, it's already been 365 days, 1 year of just downward down action and then sideways. So I don't see any reason why it has to go any lower. If there is some sort of macro event that makes all markets completely crater, like COVID here, because the reason this water falls so badly is because people are forced to liquidate to cover positions in other markets. And I'm talking about, big money. And so it causes a cascading effect, especially people that are using leverage and borrowing money, and then and then their loans get called. They got to liquidate to pay the Pied Piper, essentially. So, but what we've done here is we have formed a wonderful bottom structure. This right here, enough months have passed that I can say this looks like bottom structure. This is a bottom process right here. Okay. Now this is a bottom. This was a weird bottom though, because the government came in with a bunch of money and saved all of the markets. So this bottom was very sharp and short-lived. But look at this bottom here, okay? So this bottom right here, this is a beautiful bottom market structure. This is what you're looking for. This is very nice right there. Also, this one is very nice. You see where it comes down, came down. You have this capitulation. It moves sideways. Now, this was due to a hack. Okay, very short lived. This was done in 2 days. Those are 2 daily candles done, right? So this, I believe that was the Mt. Gox hack or something. I'm not sure, but anyway, as you can see, after that, boom. So, so this was a good bottoming structure. It ended up being a double bottom there. Okay. So what I'm saying is this. It looks like a bottom, and I'm gonna provide a lot of evidence to that case. Starting now, I'm gonna go to the. Let's go to the monthly chart. And we were talking about sentiment, right, or emotions before. And this indicator down here on the bottom, this indicates emotions. Red means that fear is low. Red being low means that fear is low, okay? And blue being high means that hope is high. So on a monthly time frame, you can see a very clear pattern emerging here, right? And let's discuss this chart. You can see how this Bitcoin price chart generally slopes upward here in general. That is because we're on the logarithmic chart, okay? This is what a normal chart looks like, right? But as you can see, this price action early on is completely flat. We can't see it to analyze it. So what we're going to do is we're going to take this and we're going to squish it down and we're going to lift these up using a logarithmic chart. Let me get rid of these, put it on logarithmic, and you can see now, we can see back when Bitcoin was only 10 cents, 4 cents, 3 cents, 1 cent back here. And as we go up, the scale changes logarithmically to squish the higher prices down. So you can see all of the price action visually in one go right now. All right, these white lines with the dates are the halvings. These are when the Bitcoin rewards get cut in half, which creates a supply shock. So if supply goes down and demand stays the same or goes higher, price has to go up. It's just a bedrock law of economics. Very, very simple to understand. So what we notice down here is, let's take a look at when these peak, right? So the blue peaked right here, right as this peaked. The price action peaked. Now it peaked again here, and you can see blue stayed elevated, and then as price went down, so did the blue. Until you get to this bottom area. This is where Bitcoin bottomed out, this is where blue bottomed out, and this is where red, which is fear, that was the highest. So hope was lost. Fear had taken over, right? And we see the same thing. Hope had taken over in the top of the bull market, and fear had receded. And in the bear market, down here, you can see fear took over again. And then we see the same pattern playing out in the last bull market, and then now, look at what's happening. Our red line, our fear has come up, and by golly, it looks like it might have even peaked. Because you can see right here, red is starting to point downward, and blue is starting to point upward. And what happens every time we see that in previous cycles? Boom, that's a new bull run. We are at the bottom of the bull run if we're going by this indicator, period. The facts in the chart show that empirically. I'm not pulling this out of my nose. It's not hopium. I'm not selling you anything. I'm just reading this chart like a book. Period. All right. I'm going to undo my little circles here. So this chart is beautiful, simple, elegant, easy to read, and you can see what's happening on the larger time frames, and that is where we remove all of the noise. See, because price is constantly going up and down, up and down, up and down, up and down, causing everybody anxiety. Well, you don't have to have anxiety if you have patience. Exercise patience, no need to be anxious. Because we can see here, we're bottoming. This red is starting to curve downward. So let's watch this chart and see what happens. If this keeps going down, then you can rest assured, like, we've done it. We've made it. Chances are, the probabilities are high that we are starting a new bull run now. All right. We're at 16 minutes already. I better make it. This is going to be a little bit of a long video. Sorry about that. Let me go back to the daily time frame and show you something cool here. All right, you can see here this W pattern that I have drawn up. So they called it W pattern because it goes up and down and then up, and then this is what it looks like is happening. A W pattern is a bullish pattern. It is a reversal pattern. So you usually find this at the bottom of a chart when price is about to reverse and go higher. So I'm not saying that we are definitely in a W pattern, but it looks like it. And it looks like we may be getting our confirmation right about now, because you see this right here. This area is important because this is where we are right now. And as you can see, this white line follows the price action downward because we're retesting this resistance right here. We're retesting. And if we can build support on it right here, and if we bounce off of this white horizontal line, okay, and then that's a good sign that we're going to be moving upwards soon. So this might give us the impetus to leave the bear market right here. And we could potentially bounce to 22K. I would love to see Bitcoin make a nice run. Actually, I'd love to see Bitcoin go above 22K and potentially start making support at that level, right? On top of where this candle right here, where that was resistance, I would love for Bitcoin to come up and make support right there. Too soon to tell what's going to happen. I don't have a crystal ball or anything, but that's what I'd like to see. That would be very healthy, because then we could potentially make a run. If we build support up there, we could make a run at this white line, which is 25,000. We could make a run at 25,000 and potentially build support there, which would be great. Right? So I'd love to see us move higher. I don't know what's going to happen, but I definitely anxiously awaiting. So, all right. Let's see what we got here. On this chart, what I want to do is lead you through a little bit of fractal patterns here. I'm going to put it on the 12-day time frame. And I'm going to show you a pattern that is occurring. So once again, we're on a pretty high time frame, 12 days. And we're going to take a look at this MACD indicator and the RSI. Okay. This MACD is a logarithmic MACD, so that we can see it all the way to the beginning. Otherwise, it will be like the price chart where it's squished down in the beginning. But with using a logarithmic MACD, we are able to see all the way to the beginning. And what we're looking for is when the when the blue crosses the red line. So the first time that happens is here in May of 2012. And then it happens here also. There's a little cross there. And there's one here. And then there's one here. There's one here after the COVID crash there. And then, you know what? Look what's happening right now. Right now, it looks like we're about to get another cross soon. If price action stays the same or goes higher, that's going to cross. All right, let's take a look at our RSI, where the bottoms are in the RSI. It bottoms out here. It bottoms out here. It bottoms out here. It bottoms out here. And it bottoms out once again right here. All right. Now let's mark Bitcoin bottoms on the price chart. Because right now we're focused on bottoms. When's the bottom? When's the bottom? Everybody wants to know when the bottom is because that's when you want to buy, right? You want to buy when it's cheap. So it looks like this was a bottom here. This was kind of a bottom here. It was a bit of a bottom. All right. It was between these two kind of bubbles here. Definitely had a bottom here. Had one during COVID. Can't forget that one. The infamous COVID crash. And then we also had one here, potentially, right? That's the thesis. So a pattern emerges at this point where the RSI tends to bottom where the price action does. And then it looks like shortly after that happens, the blue crosses the red line somewhere in the middle of the bear market. Now let's see if that happens here. Now here, the RSI it dips and then goes back up here. But it's hard to know that that's a bottom. Like if you were there, it didn't go all the way down. Because you can see here, all of the other bottoms occur below this green line, right? But this one didn't. So this one, I wouldn't really count that because we didn't have a confluence of all three. So although it would have been a good time to buy, according to this chart, we're just going to leave it when all three match. All right, so all three match here, where the RSI bottoms out with the price action, and then we have a cross of the blue or the red. And then here again in 2018, same pattern, the RSI bottoms, price action bottoms, then blue crosses red. Same thing with COVID. All three happen, and then look where we are right now. Right, so we've got 4 data points of Bitcoin acting this way. And where we are right now is we had massive capitulation occur. I mean, absolutely massive capitulation right here, right? Forming what looks like a bottoming pattern easily. And then the RSI bottomed out very low, the lowest it's ever gone, actually. I think it's either the lowest or close to the lowest. Maybe the second lowest, but the RSI bottomed out big time during this capitulation area. So, and here we are with this blue line ready to cross the red line again. So if we were to take this chart at its face value, then Bitcoin has bottomed and we are starting the new bull run. Right now is the least risky time to buy Bitcoin. There's only more risk going forward. And this is how W's work, right? The W pattern I was talking about. I forgot to bring this up during that time, but you'll have a downtrend and then two bottoms, and then it'll go up, break out, and then as long as you have to wait to call this a W, you have to wait for it to break resistance and then come back down and retest it as support. And then if it starts going up, boom, that's the start of a new trend, an uptrend. All right, so this is the chart I just showed you. All right, this indicator here's the CM Ultimate MA. And let's see if we can find a pattern here as well. So Bitcoin, you're going to recognize this chart. And let's see, Bitcoin topped here and it bottomed around here. So you can see here, this bottomed as well. It turned red. And then you can see right here that it went up. There was a leg that went up and then it turned green. All right, well, Bitcoin bottomed here. So did this line. And then the last leg was red. It went up and then it turned green. Interesting. In this bear market, Bitcoin bottomed here. And then here you can see it was red during the bear market. And then the last leg went up and then it turned green. Sorry. All right, let me move this over. All right, and you can see here, even here during COVID area, Bitcoin bottomed, the red turned upward, then it turned green. But the red turned upward first. And here we are, we've been in the red, right? And so we're looking for, if in 2 months the next red leg turns upward, that's a good sign that we're heading out of the bear market, because that has happened over and over 4 times now. Before, this would be the 5th time, right? So patterns are emerging. It takes 3 times to make a pattern, right? So, and these are long time frames. You don't need quite as many data points on super long time frames, especially this is a 2-month time frame. All right, here's another chart of, this is a Fibonacci scale moving averages right here. And you can see Bitcoin, let me get rid of these. Delete this. And you can see Bitcoin reaches the bottoms of these channels and the tops. Now, over time, Bitcoin becomes less volatile. It'll go up less. So you can see in the beginning, it went up high. So Bitcoin went way up high above this Fibonacci line. Here, this light blue, you can see it went up against the light blue. This went up way up above it. And then in this bull run, it went, and it just touched the light blue line. And then here, it didn't even make it to the blue line. It made it to the purple line, right? So over time, Bitcoin will become less volatile. It takes more money to move the market, okay? And you can see that, but we're focused on bottoms right now. So let's bring out our handy brush. Bitcoin bottomed at the bottom of that channel. Bitcoin bottomed at the bottom of that channel. Bottomed here. Bitcoin bottomed here. And look where happened. Look where we are now. Look what happened. All right, Bitcoin has bottomed at the bottom of this channel. Okay, that's a classic example of a bottom when it goes into that channel. Okay, this is the mean that Bitcoin reverts to. All right, let's look here. This chart right here, you see here where it says mean. This is the mean, and price reverts to the mean, whether it's above it. When it goes too far above it, it wants to go back down to its natural growth line, its natural rate of growth. And that's sort of what that chart is telling us. There's kind of a natural rate of growth that we can view, that we can see in Bitcoin. I mean, look at it's always going up. And I can prove it to you. If we put on a moving average, we'll put on one moving average, and we'll change it to 200 week moving average. So I'll put this on the weekly time frame here. And you can see on a 200 week time frame, which is about 4 years, Bitcoin's price never goes down. So every Bitcoin investor needs to buy as close to the 200 week moving average as possible. Look, bottom, bottom, bottom. They all bottom in the same place. All the bottoms happen. You want to buy it when it's under the 200 week moving average. It's the buy of a lifetime. Every time it dips below, it goes up. That was 10,000%. Look, Bitcoin went below this line and it went up literally 12,000% right there. And then when it hit the line this time, it went up 357% there. But it really went 2,131% to the top of the next bull run. Right? So if you buy close to this blue line, and right now we are under it. We are lucky enough to be under this blue line. So take from that what you will. All right. Last chart I'm going to show you here is this pi cycle bottom chart and top. So the pi cycle is a set of, it's the multiples of a couple moving averages. I'm not going to get into how it works, but the indicator is all you need to see right here. So as you can see, this indicator has been able to pick the top on many occasions here. Okay. Let's see. It picked this top too. Now it did go a little higher here, but the pi cycle top did a very good job choosing this as a top. That was a good place to sell, I promise you, especially if you bought it at the pi cycle bottom. Pi cycle bottom, look at where the bottoms are happening on this indicator. The same place, confluence of everything else I've been telling you, right? So take from that what you will, but pi cycle bottom has triggered and we are still in that zone right now, but not for long. I think that the train is going to leave the station soon. Yeah, so good time to buy. All right, let's move over to on-chain data. So what I love about on-chain data is that it can support our thesis that we come up with on the price action. So is the on-chain data support what we're seeing in the price action? Usually, yes. So let's go through some of my favorite charts here. The MVRV Z-score has bottomed out. And you can see what happens every time it bottoms out. It's the best time of your life to make an investment in Bitcoin. This is when you do it. When everybody else hates it. When everyone else has sold it. When everyone else thinks it's going lower. Okay, that is when you want to be buying it. Because you make your money when you buy it. Okay? That's when you make your money, when you buy an asset. So you want to get a good deal on things. All right, this chart is the number of transfers to exchanges, right? So people move, whales move Bitcoin to exchanges to sell it, and they move it off exchanges to hold it. So when you see the amount of Bitcoin going to exchanges increase, that means it's because the whales are going to sell it at a high price, right? You can usually see that's what's happening. And then as this line goes down, that means Bitcoin is leaving exchanges. It's being transferred off of exchanges during that time. So as you can see now, we are at a low point right now. So a lot of there's no Bitcoin hardly at all being transferred to exchanges for selling. So this is a decrease in selling pressure. There's less Bitcoins to sell because less are being transferred to exchanges. All right. And here is the number of transfers from exchanges, right? So, so this is creeping higher right now because people are moving Bitcoin off of exchanges as well. All right, reserve risk is related to how much Bitcoin is on exchanges, right? And it's called reserve risk. So what this does is it shows you that right now there is very little risk of, it means both price is low and there's very little Bitcoins on exchanges. So it's a ratio. And as you can see now, it's the lowest ever. This is the lowest amount. This is the lowest the ratio's ever seen. So indicating very good time to buy Bitcoin. All right. On the Puel multiple, this metric, as you can see, every time it dips into the green, that's during a bottom. So, and you can see here, this low here dipped into the green during our latest, what I believe was the bottom. And I called the bottom in June. So it looks like that is playing out exactly as predicted. So this should be moving upward over time. Here's another ratio. Oh wait, that's the MVRV score again. Here is, the net unrealized profit and loss. This is a good one because it should, look at this chart right here. Okay. You've got capitulation in red, then hope, fear, optimism, anxiety, belief, denial, and euphoria, greed. Okay. So this is mapping what we saw on this chart, all of the emotions. Where'd it go? Okay. So the reason it can do that is because we can analyze how many Bitcoins are in an unrealized loss. So this is a measure of how much pain there is in the market. Okay. So as you can see on every bottom, there is a point of maximum pain. And we are there right now. we are in the pain area, capitulation and pain area right now. So so that causes a lot of selling, a lot of paper hands. They fold, they sell, they dump their coin, and then the whales are buying it up cheap. They're filling their warehouses full of Bitcoin so that they can mark it up to 100,000 and sell it back to everybody that sold it at 20,000. It's great. All right, adjusted SOPR. I'm not going to get into what that is, but as you can see, it tends to dip during bottoms. And look what it just did during that big old giant capitulation. Red waterfall candles, it hit a low. and it's been rising ever since. So just yet another indication that we bottomed. All right, I brought this one up because this is the adjusted circulating supply, and I want everybody watching this to understand that what this does is it's called the adjusted circulating supply because there might be 18.5 million bitcoins total mined right now, but after 7 years, if a bitcoin hasn't moved out of a wallet, then we consider it lost. Or in super cold storage, the people holding it are so statistically unlikely to put it to market that we consider it lost, right? So this is the circulating supply. So all the coins that have circulated in this last 7 years have peaked. Okay. So in 2016, 2015, 2016, it hit 15 million coins. And ever since then, it did go to 15.4 million coins, 15.5 million coins during the COVID crash. Okay. 15.5 million during the COVID crash, then things changed. Coins have been purchased and they have been taken off the market, and the ones from 7 years ago are dropping off, the ones that are lost, and now supply is going down to where we're now dipped under 15 million. So it's essentially been flat ever since 2016. That is 6 years of supply, circulating supply, remaining essentially flat. So if any kind of event happens that causes Bitcoin to be adopted en masse, in particular, it basically, that means price can only go up anytime there's any new demand because supply is just the same. And the halvings matter because supply is flat. So when the new supply coming in is cut in half, you're not adding much, right, to what's already pretty flat. So demand goes up, price goes up. And as far as stock to flow, that is a ratio of the amount of new Bitcoins it's a ratio of the new Bitcoins being produced each day divided by the total number of coins outstanding. And at each halving, the stock to flow goes, the ratio goes lower. So the price goes higher. So I like to compare it to gold. Right now, there are 200,000 tons of gold in the world that we've been digging up for thousands of years. It's estimated 200,000 tons of gold, and it will fill 2 Olympic-sized swimming pools, and that's it. That's all the gold on the whole planet in existence, and all the jewelry, and all the coins, and all the everything, electronics, whatever else gold is in. That is all of it, 200,000 tons. Well, they pull 2,000 to 3,000 tons of gold out of the ground each year. So you've got a stock, existing stock, and then you've got new flow. So the ratio goes like this. At 2,000 to 3,000 tons per year coming out of the ground, it would take 60 years for the amount of gold to double. So for the world to have 4 Olympic-sized swimming pools full of gold, it'll take 60 years. But what that means is that the amount of gold in the world is inflating. It inflates. There is more gold being pulled out of the ground and put on the market, right? And if you go mine an asteroid with a bunch of gold, then it really inflates the gold supply. So gold becomes less scarce. So it's valued less per ounce. Well, Bitcoin you cannot pull more Bitcoin out of the ground. It has a daily issuance, only so many are produced per day. And right now it's about 900 per day. After 2024, in May of 2024, that's going to go to only 450 new Bitcoins per day. And then in 2028, that's going to go down to 225. So the amount keeps going lower. So that means that the stock to flow keeps going higher. Like there's a cap of 20 million Bitcoins. So eventually, due to the halving cycle, the stock to flow ratio crushes any other thing in existence. It is so rare that nothing else, we don't know of anything else in the universe more rare than Bitcoin, except the human being. Really. So it's the hardest money. It is hard money. You cannot produce more. It's mathematically impossible. It's ruled by the laws of math and computer code, and there is nothing you can do about it. You would have to get half the world to agree to change that, and the likelihood of that happening is so astronomical as to be virtually just not even an option. So right now, the stock to flow deflection means that right now we are sitting at the lowest. If you're valuing Bitcoin based on scarcity, it is at the lowest point ever, which means that it is a very good deal right now. It means that human beings are not valuing it according to its innate properties, like as it should be valued, right? So at some point in the future, human beings could get wise enough that this thing is valued where it's supposed to be, and this helps price skyrocket upwards. Alrighty, and that is my presentation for today. I wanted to prove why I think that we have hit a bottom. And this isn't even all of the data points that I have come across. This is a quarter, maybe a third, I don't know. This is a small amount of the evidence that I've come across. There are charts that I don't have access to that I've seen in other videos because I'd have to pay a lot more money to see those. Like on Glassnode here, you can see here where it says T1, T2, and some of these are T3. Well, I have to upgrade to see the T3 of these. And a lot of these also have a ton of confluence with having a bottom. And I've seen them in videos. People will make videos and show them, but I can't show them here. In any case, Glassnode they actually put out a YouTube video once a week called The Weekend Charts or something like that. And I watch those every week. And they go through the kind of an on-chain analysis of where Bitcoin is. They do a really good one. And so you can go on their YouTube channel and check those out if you like. But I'm going to wrap this up. That is a 50-minute thesis paper, verbal and visual thesis paper on why I believe that Bitcoin has highly likely bottomed. I called that in June because I saw the confluence there, and nothing has changed. In fact, I've only found more and more evidence, and enough time has passed that the probabilities have only gone even higher than when I called it in June. So this is me just reading the charts. I didn't make any of this up. You saw it with your own eyes. So anyway, I hope you learned something about Bitcoin and how to think about it and how to look at it and how to understand it. And I hope that I can shorten your journey to that understanding, because Bitcoin is It's God's money. It is the only resource on earth without blood on its hands. It is beautiful. And I'll leave you with that. This has been the Bitcoin weather report for Sunday, October 30th. I hope you all have a blessed day.